Hello traders, this is Gary Odom with Top Dog Visualized Trader New Generation. I put a little trade in today and I got to thinking about maybe you would want some of the finesse that I used when I decided to make this trade. To begin with, it's in the video. You can see it's here on the screen. It hadn't actually triggered yet, and that's good. It's doing exactly what I want it to do. And I've been watching the video for a long time because I've made a lot of money off of it already this year. I caught this big long run you see here. I caught some short runs out of it as well. This is a great stock, but there's some problems with it. And one of the problems is that earnings are like they're 50 times more. I mean, price is 50 times more than the forward estimated earnings. Right now, the price is 50 times more. So I said, my God, Gary, why do you want to buy this crazy thing? Well, mostly because as long as they keep buying it, I'll make money. And if they don't, then I'll lose a little bit. But I've already made so much that if I lose a little bit, I'm still way ahead. So, okay, maybe not everybody's in that position, but I'm just trying to give you the finesse of why I'm doing this. And it came up because one of the, I don't know, financial news networks, it was on TV. I don't normally tune it in, but my lady does because she's also heavily invested in the market. And these guys were talking about, don't trade this. Don't trade this. This is not a good thing to trade. So that was argument enough for me to want to trade it. So here's what I'm going to do. I know this thing's going to keep running. It's just got too much momentum. It's just not going to keep running right now. You see how it's pulling back? That's what I want to see. I want to see this pull back as well. And it may not pull back as far as I want to. But regardless, I've got a trade set up. I'll show you where it is right here. I can actually show it to you. Here it is. There, I won't move my mouse. You'll notice that is to be on the day chart. See, I can't point at it, but look in the white line, because if I move my pointer, it'll go away. Look in the white line toward the right. It says D is true. Okay, so this is programmed to go off on the day chart. So let's look at what the day chart looks like. Well, here it is over here. So it's, it's already pulling back some. How far is it going to go? Well, it's certainly not going to go back to the moving average. It may go back to this previous bearish zone that was here and bounce off of that. And maybe not. There was a little gap here. Maybe it'll go to the bottom of where this gap formed and go again. I don't know, but it will go again. And I noticed there's also another bearish. Is that a bearish zone? No, that's just a red line off this stop symbol. That's all it is. Just like it is here. So anyway, I'm looking for it to pull back. When it does, I'll be in a position to take a trade. Now, I did some kinky little things. I did this because I'm not really particular about trying to be real precise about the entry point. I know this thing has got so much momentum behind it when it's rolling that it won't really make any difference. So here's what I did. Let me show you. And I also did this inside this study that's here as well. And I'll show all that to you in a second. I went in here and I changed my K limit to 0. Insane, right? Nah, I'll tell you why. As long as the stochastic is going up, and you'll see it's not going up anywhere, I still have a read on whether or not it's going up. I don't know, I probably made my point to some of you that I trade using the labels. Those little arrows that you see here on the screen, they are reserved for my trade manager, showing me how it's set up and where it would trigger exits. That's all it's for. I don't use this to trigger exits. I use this to show me where it would have triggered exits, and then I determine whether or not I want to use that setting. So, okay, I don't really trade off of these arrows. They're purely indicators. I trade using labels, and that's it. I find them to be more dependable uh, because the ones on the candles are sometimes hard to see if you have, particularly if you have a lot of stuff on your screen. These are really easy to see. They're up here in the corner. If they're red, they're red. That's all you need to know. You don't have to get involved in a little twinkles of this is up or that's down, or trend is up. It's always been up. It's been up forever. So I'm not concerned about trend. Even if I have a pullback, I'm still going to have an uptrend. Perfect example of that is in this pullback right here. It was a big pullback, but trend was still up. Oh, you see this at the top of the screen? I'm glad this popped up. Alert, new symbols. Da 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 da. I'm a okay. They're gone, but they should be here. Perhaps, maybe. Let's see. Come on, guys. Show me if you're there. Yeah, here they are. New symbols. Here they are. This is this one. 12:27. What time is it? Oh, it's in 1300 time. Here we go down here. Just came up a CRM, uh, Google, Google L. So anyway, these popped up and so were added to TDVT bullish. I'm going to depart from the presentation I was on just to show you something real quick. Then I'm going to come back. I have to do this, guys. I set up two scans, okay? One is called a basic with two eyes. That's just for luck. A basic call option scan, all right? And there's more to it than what's here. And what you put up here is pretty much up to you. If I can find the magic spot, there it is. This is not it. Oh boy. I did it on my other computer and I'm not sure this is actually the TDVT. Oh, okay, we are right. We are right. I just made a slight mistake. I want to get the first one in. This is the second one. This is actually the basic call option scan. You see it's over here. And these are some of the settings I put up there. You can do what you wish. I put like, put sizzle index and open interest and theta, beta, delta, whatever you want to put in here to try to sort out some symbols. And I scanned all stocks and the second filter was all optional. All right, I don't really do anything with this. I just let it go. What I do something with is I take this scan and I load it. Again, I did the same thing. This one. Then I put that scan that I just showed you as the scan I'm going to scan. All right. I know, it's crazy, right? But it works. And here's my TDD feed, a new gen scan. All right. I set it up to be 1 hour, 4 hour, and I'm just looking for a positive trend on the day. And those symbols is what it called out of there. And they're all strong call option candidates. I won't say that I would necessarily trade every one of them. But anyway, that's all I'm going to talk about here. I'm not going to try to teach you options course or anything. This is a little bit about using a scan and how to scan scans. It just helps filter through all the garbage. If you try putting all of this on one scan, it just doesn't seem to work as well. You're better, like this one deals with option, this one deals purely with stocks. So I kind of do it that way. All right, let's go back to the original intention. I'm sorry I departed from this, but I had to show you that. So anyway, I wanted to take a trade in the video, but I didn't want to take it now because I felt pretty sure it was going to go against me. So I set it up using a regular TDVT and a COS. I'm not going to go through that step by step, because there are other videos that cover that. But I'll show you just some thoughts that I had and why I did it. And right now, I'm going to I'll change this to the 1 hour chart, I think. When I set it up, let make I didn't make that trade on this computer, so I want to make sure I got this stuff in here right. Here's the trade manager. Yeah, I put 10 grand in to let it tell me how many shares I need to buy. I have a profit target of 600. I have a trade risk of 300, and I had an interim risk of 200. Now the interim risk is how much it's going to come back against me. I don't use that actually. I could. I don't use that. What I actually use, I use the volatility momentum is my interim exit. Now you'll have to watch the other videos if you don't understand what this is about. But you'll see one of the settings that people don't understand what they're about because they haven't seen this video yet. If you'll notice up top, the VI stop, and what that is related to, it is volatility index momentum. The VI stop is 3.5. Now 3.5 is not very much. It's going to stop me out pretty quick because a $200 stop, okay, is 10 points, and a $300 stop is 15 points. So obviously this is not going to work. So what I might do is I might just change this to a 4-hour chart. Well, when I do, okay, we'll cancel this and come back. When I do, I get 19 points. That's okay, but it's a little bit heftier than 300, and I don't know if I want to come back 300. So I'm going to have to make some changes. So what I did is I went into here and went to that 730 business. Now this is how many bars it looks back to find the previous high or previous low, or previous highest high and previous lowest low. And I changed this to 50. I actually did it in incremental stages. I tried 35, 40, but anyway, I decided I'd try 50, and it gave me what I wanted. So we'll apply that now. We won't have to come back here again. And it dropped it a little bit to 18, which is, that could probably be okay. And see what it did on the 1 hour chart. And the 1 hour chart is 12, which is very close to the 15. So I can use either one. I can use the 4 hour, which is going to be about $240 here. And the other one, 18, is going to be about $360. Well, I kind of like this one better. So now I had like 3 before, which is ridiculous. So now I have a realistic volatility exit that's based on 50 bars. So it's got a wonderful history to be able to track this. Sometimes the shorter bars, like you only want 20 bars, when you're trading a really volatile stock, you can't afford to give it much room. But this is not all that volatile, so we're good to go. So that's number one. That's one of the finesses I did. Again, I'm going to do this, but I'm not going to do this. I'm just going to delete it and go back. I just want to show you what the setup is. Okay, this is an exit on the day chart. Pardon me, an entry on the day chart. The long entry, TDVT, I'm just using standard TDVT, none of this other esoteric stuff, just good old homegrown TDVT. I love it, love it, love it. No such things as dual trends are all right. Look, we got positive trends all over the place. We don't need to be concerned about that. And we'll come down here, and you'll notice we have a 0 K limit. Okay, that's some of the little tweaks that I did, and we're good with that. Matter of fact, we can cancel this, we can cancel this, we can cancel this, and we delete this, and we'll go right back to our study again. Now let's look at the exits. This exit is just purely a stop. That's a $300 stop. I used this stop right here, this 14.2857 stop. uh, or did I? No, I just used a 15 is what I use. This changes, as the product as price moves. These numbers change because they're constantly recomputing what they're doing. So anyway, I think I used a 15-point stop. Let's just check it and see. I've forgotten. Yeah, exactly. That's what it was. Just a standard old 15-point stop. Now what that means is whatever price it triggers at, it has to back up 15 points. Now you might think that's a lot, but it isn't, because I'm only taking 20 shares because that's what 10,000 buys me, because that's what actually says 21, because when I looked at it, it was 490 something. Okay, well, the price has dropped a little bit, so now it says 21. It's not going to change the amount I'm buying, because the amount I was going to buy was based on another price. But still, price will be price, whatever it is, when it triggers. And the other exit, I'll go ahead and go into there and look at that too. Got to be sure which one I click, otherwise I will mess it up. Okay. This is on the 1 hour chart, and we're using 750 rather than 730. Remember, we adjusted those, and I put a projected price of $521, and I'll show you how I come up with that. Again, I'm not going to save these. That's the only thing I changed. Everything else is standard. And the $521 is because it gave me 21 points in order to hit my target of 600 bucks. Now, you know what? It's no big thing, just as long as you get some kind of realistic number in there, because you really don't know what price you're going to get in at yet. But it's not a problem. You certainly are not going to gobble up 21 points before you get in. As a matter of fact, if you get in at a much lower price, then it's actually going to give you more profit target, because even though you're going 21 points, I went from 21 points from a 490 something, and this is just going to be getting in at wherever it gets in, and that 521 is still going to be the same price. But the beauty of that is, after you get in a trade, you simply right click on that, you go cancel and replace, just like I did before. You get in here, you make any kind of changes you want, and you confirm and send, and it'll change that exit point for you. I'm not going to do that because I'm very happy with where it is right now. And frankly, that's just about all I had to cover with you. I just thought it was a neat little idea about why I'm getting into the trade. And people might not think, well, this is going down, man. Why you want to look at that? Because that's what the pros are doing. They're getting set to make a trade on this before the retail traders even thinking about getting in. And I'll be getting in a little bit after they will be, because the study's not that fast. But a lot of those professional traders trade off the day charts anyway. And that is where my entry is going to be. It's going to be on the day chart. So we'll see how all that works out. I know that I won't catch it at the absolute bottom. And if I did that, if I came in and watched it, kept an eyeball on it, watched what price was doing and how it was reacting, I could likely do that. I could likely catch a real low ball number and get in. But the key is, I don't want to watch it. I'll give up a few dollars so I can go on with my life. Now, I got enough money to trade it straight up. I didn't need to take just 20 shares, but I wanted to show you that as a 20 share trade, to tell you that there's plenty of money to be made trading small quantities of shares. Not everybody can trade 500 shares of a $500 stock. That's a lot of money, guys. Just think about adding 2 zeros to that number. Just 100 lots, almost 50 grand. So, so we trade 20, 10,000. So that's all I have for you. I hope you got something out of it. Give me a heads up or a shout or hello or something. You got any questions? You know where it is, topdogstudy@gmail.com. And we'll see you on the other side.